Market Indices Overview, a comprehensive look at the global stock market indices. Presentation Overview. What are market indices? Market indices are benchmarks that track the performance of a group of stocks or other financial assets. Market indices from the Americas, EMEA, and Asia Pacific regions. We'll explore the performance and characteristics of market indices from the various regions. Metrics used to evaluate the performance of market indices. We'll examine the most widely used metrics used to evaluate the performance of market indices, including total return, price return, and market capitalization. Introduction to market indices. Market indices. Market indices measure the performance of a group of stocks representing a particular sector of the market, such as the technology sector or the energy sector. Index creation. Market indices are created by selecting a group of stocks that represent a particular sector of the market and tracking their performance over time. Index weighting. Market indices are weighted according to the market capitalization of the stocks in the index. This means that larger companies have a greater impact on the performance of the index. What is a market index? Definition of market index. A market index is a statistical measure of the performance of a group of stocks representing a particular sector of the market. Calculation of market index. A market index is calculated by taking the average of the prices of the constituent stocks that are part of the index. Examples of market indices. Some of the most popular market indices include the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite. Why are market indices important? Track performance of stock market. Market indices allow investors to track the performance of the stock market as a whole or specific sectors of the market, providing a snapshot of the overall market trends. Informed investment decisions. By monitoring the performance of market indices, investors can make informed decisions about buying or selling stocks and develop investment strategies that align with their financial goals. Market indices in the Americas. Dow Jones Industrial Average. The Dow Jones Industrial Average is a stock market index that tracks 30 large publicly owned companies traded on the New York Stock Exchange and the Nasdaq. S&P 500. The S&P 500 is a stock market index that tracks the 500 largest publicly traded companies in the United States, presenting about 80% of the total U.S. stock market capitalization. Nasdaq Composite. The Nasdaq Composite is a stock market index that includes all stocks listed on the Nasdaq stock market, which is the second largest stock exchange in the world by market capitalization. Dow Jones Industrial Average, DJIA. DJIA is one of the most widely used market indices in the world, composed of 30 large cap stocks in the United States, representing various sectors of the economy. Performance of the Dow Jones Industrial Average. Performance of the DJIA is used as a barometer of the health of the U.S. economy and the overall stock market. Price-weighted methodology. The DJIA is price-weighted, which means that the index is calculated based on the sum of the prices of the 30 constituent stocks rather than their market capitalization. S&P 500. Composition of S&P 500. The S&P 500 is a market index composed of 500 large-cap stocks in the United States. It includes stocks from companies across various sectors, including technology, healthcare, finance, and energy. Benchmark for U.S. stock market. The S&P 500 is widely used as a benchmark for the performance of the U.S. stock market. Investors use the index to track the performance of the stock market and to compare the performance of their own investments against the broader market. Market capitalization weighted methodology. The S&P 500 uses a market capitalization weighted methodology to calculate the value of the index. This means that companies with larger market capitalizations have a greater impact on the value of the index than smaller companies. Nasdaq Composite. Composition of Nasdaq Composite. The Nasdaq Composite is composed of over 3,000 stocks listed on the Nasdaq exchange, including technology and growth stocks, making it an important benchmark for the performance of technology stocks. Market capitalization weighted methodology. The Nasdaq Composite uses a market capitalization weighted methodology to calculate the index value, giving more weight to larger companies and therefore reflecting the performance of the overall market. Market indices in EMEA. FTSE 100. The FTSE 100 is a stock market index consisting of the 100 largest companies listed on the London Stock Exchange. It is one of the most widely followed indices in the world. DAX. The DAX is a blue chip company stock market index consisting of 30 largest companies listed on the Frankfurt Stock Exchange. It is the primary index of the German stock market. CAC 40, CAC Current. The CAC Current is a benchmark stock market index consisting of 40 largest companies listed on the Euronext Paris exchange. It is the primary index of the French stock market. IBEX 35. The IBEX 35 is the benchmark stock market index of the Bolsa de Madrid, Spain's primary principal stock exchange. It is composed of the 35 most liquid stocks traded on the Madrid Stock Exchange. FTSE 100. What is FTSE 100? FTSE 100 is a market index composed of the 100 largest companies listed on the London Stock Exchange, providing a measure of the health of the UK economy. Market capitalization. The FTSE 100 is weighted by free float market capitalization, which means that companies with a higher market capitalization have a greater impact on the index performance. Key sectors. The FTSE 100 is dominated by companies in the financial, oil and gas, and mining sectors, but also includes companies from a variety of other industries. DAX. Composition of DAX. DAX is a market index composed of the 30 largest companies listed on the Frankfurt Stock Exchange, including companies like Siemens, Volkswagen, and Deutsche Bank. Benchmark for German stock market. DAX is widely used as a benchmark for the performance of the German stock market, reflecting the overall economic health of the country. Market capitalization weighted methodology. DAX uses a market capitalization weighted methodology, which means that the companies with the largest market capitalization have a greater influence on the index performance. CAC Current. Overview of CAC Current. The CAC 40 is a market index composed of 40 largest companies listed on the Euronext Paris exchange. It is a benchmark index that reflects the performance of the French stock market. Market capitalization weighted methodology. The CAC Current is a market capitalization weighted index, which means that the weight of each individual stock in the index is based on its market capitalization. This methodology ensures that larger companies have a greater impact on the index performance. IBEX 35. What is IBEX 35? The IBEX 35 is a market index that tracks the performance of the 35 largest and most liquid Spanish companies listed on the Madrid Stock Exchange. Market capitalization weighted methodology. The IBEX 35 uses a market capitalization weighted methodology, which means that companies with higher market capitalizations have a larger weighting in the index. Market indices in Asia Pacific. We'll explore the performance and characteristics of key market indices in Asia Pacific, including the Nikkei 225, Hang Seng Index, and Shanghai Composite. Nikkei 225. Nikkei 225 Index. The Nikkei 225 is a market index that tracks the performance of the 225 largest companies listed on the Tokyo Stock Exchange, providing an insight into Japan's economic performance. Price-weighted index methodology. The Nikkei 225 uses a price-weighted methodology, which means that the stocks with higher prices have greater influence on the index compared to those with lower prices. Hang Seng Index. Introduction to Hang Seng Index. The Hang Seng Index is a market index composed of the 50 largest companies listed on the Hong Kong Stock Exchange. It is widely regarded as a barometer of the Hong Kong stock market and a benchmark for Asian markets. Market capitalization weighted methodology. The Hang Seng Index uses a market capitalization weighted methodology, which means that the weight of each stock in the index is based on its market capitalization. This methodology ensures that larger companies have a greater influence on the index than smaller companies. Shanghai Composite. Shanghai Composite is a stock market index composed of all the stocks listed on the Shanghai Stock Exchange and is a good indicator of the overall performance of the Chinese stock market. Performance of the Shanghai Composite. The Shanghai Composite has been known for its high volatility and subject to fluctuations due to various internal and external factors, including economic policies, global market trends, and other geopolitical factors. Market capitalization weighted methodology. The Shanghai Composite uses a capitalization weighted methodology, which means that larger companies have a greater impact on the index performance than smaller companies. Metrics of market indices. Market capitalization. Market capitalization is a metric used to measure the size of a company or market index. It is calculated by multiplying the number of outstanding shares by the current market price per share. Price to earnings ratio. Price to earnings ratio, PE ratio, is a metric used to evaluate the value of a company or market index. It is calculated by dividing the market price per share by the earnings per share. Dividend yield. Dividend yield is a metric used to evaluate the income generated by a company or market index. It is calculated by dividing the annual dividend by the current market price per share. Beta and volatility. Beta and volatility are metrics used to evaluate the risk associated with a company or market index. Beta measures the sensitivity of a stock's price to changes in the overall market, while volatility measures the degree of variation of the stock's price over time. Market capitalization. Definition of market capitalization. Market capitalization is a measure of a company's or market index size, calculated by multiplying the price per share by the number of outstanding shares. Importance of market capitalization. Market capitalization is an important metric used to evaluate the performance of market indices. It provides a measure of the size of a company or market index. Price to earnings ratio, PE ratio. Price to earnings ratio is a financial ratio that measures how expensive a company or market index is relative to its earnings. It is calculated by dividing the market price per share by the earnings per share. Interpreting PE ratio. A high PE ratio may indicate that a company or market index is overvalued, while a low PE ratio may indicate that it is undervalued. Dividend yield. Dividend yield is a ratio that compares the dividend amount paid out per share to the share price. It is used to measure the income generated by a stock or market index. Beta. Definition of beta. Beta is a statistical measure that quantifies the volatility of a company or market index relative to the overall market. It helps investors understand how risky an investment is compared to the market. Interpretation of beta. A beta is one. A beta of 1 indicates that the company or market index is volatile as the overall market. A beta greater than 1 indicates that it is more volatile, while a beta less than 1 indicates that it is less volatile. Volatility. Volatility is a statistical measure of the dispersion of returns for a given security or market index. It measures the degree of variation of financial returns over time and is an important concept in finance. Conclusion. Market indices are a vital tool for investors to track the performance of the stock market. By exploring the most important market indices from around the world and examining the metrics and factors that drive their performance, investors can make informed decisions about buying or selling stocks. Thank you.